This is your U.S. market wrap for October 28, 2025. Markets closed higher today as Nvidia once again powered Wall Street to fresh highs ahead of the Fed's interest rate decision. The S&P 500 and Nasdaq extended their winning streaks, driven by large-cap tech momentum, while small caps continued to lag. Here's what shaped the market today. First, Nvidia's surge dominated headlines. During the company's GTC conference, CEO Jensen Huang unveiled new partnerships, including one with Nokia, and highlighted the surging demand for high computing power. Nvidia's stock rallied after he projected U.S. Energy Department projects and AI chip orders exceeding 5,000 units by year-end. Other AI-related stocks, including Broadcom, also followed suit. Second, investor sentiment strengthened as the market grew confident that the Federal Reserve may finally signal the end of its tightening cycle. Treasury yields eased slightly, with the 10-year yield dipping below 3.98%. Traders are now pricing in a potential rate cut before the end of the year, as inflation shows steady moderation and economic growth softens. Third, macro data continued to paint a mixed picture. The CB Consumer Confidence Index rose to 94.6, showing modest improvement, while the Richmond Manufacturing Index came in at -4, indicating contraction but slightly better than previous readings. These signals suggest a cooling, yet stable economy heading into the final quarter of 2025. Meanwhile, Microsoft confirmed a new strategic deal with OpenAI, securing a 27% equity stake worth roughly $135 billion. The move reinforces Microsoft's long-term bet on AI infrastructure and the enterprise software ecosystem. Investors are now awaiting quarterly earnings from other major big tech firms that collectively represent nearly a quarter of the S&P 500's market capitalization. Energy markets, however, painted a different story. WTI crude slipped below $61, while natural gas fell to 3.25. Reflecting weaker short-term demand. The dollar index eased slightly, while gold prices also declined as traders positioned ahead of Wednesday's Fed meeting. Analysts remain divided. Some warn the market may be entering an overbought zone, expecting a potential 5-10 correction before year-end. Others argue that the AI infrastructure cycle is still in its early phase and could continue, driving earnings strength into 2026. In summary, today's session reflected renewed optimism around AI and potential policy easing, a combination that continues to fuel risk appetite. But with key rate decisions and corporate earnings ahead, volatility could resurface at any moment. You've been watching Wall Street Brief. See you next time.